Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
Have you ever heard of this quote on death and taxes by Benjamin Franklin? In 1789, upon the formation of the American Constitution, he was supposed to have said, "In this world, nothing is certain except for death and taxes." Yet, how much time are you spending on death and taxes? When it comes to financial planning, it's actually something you can't avoid. Today's episode is all about taxes and estate planning, why employees and entrepreneurs need to know how to do their taxes right, and why estate planning matters, and when you should start doing it. So John, let's start with taxes. No matter if you are working for someone as an employee or running your own business, doing your taxes right can help you to save a lot of money. So how does someone do that correctly?
I think get the foundation right from the start, because let's start with the employee one, which there's a majority of the population. Every year with the government budget announcement, there's definitely some goodies for taxes. And there's two ways. One is understand the tax code yourself or understand all the relief and spend time to actually plan for your taxes. Like, for example, are you maximizing on your lifestyle budget? Are you maximizing on books or that kind of thing? Because as an employee, those are the only kind of relief that you should be going for. The other way is outsourcing. And I know people think, why should I pay people to do my taxes? I can do it, file everything online. But then it begs the question, do you have the time to sit down and understand the tax code and to understand all the relief? And if you don't, then might as well just outsource it to someone that can show you the ropes and do it for you, and you potentially could save quite a bit on taxes actually.
So you're saying even if someone doesn't run their own business, so let's say they're just an employee, personal taxes they should outsource that as well?
Yes. So I feel that if you are already paying, let's say the top bracket, 28%, right? I'm very sure a person who is getting that kind of salary is either they're very busy with their own career or whatever and may not want to spend the time to understand all this. That's where that outsourcing is important. I mean, your time is money, right? It doesn't necessarily mean only when you run a business that you can outsource. I know of some colleagues who are high ranking in the corporate world. They actually outsource their tax planning to someone else. Because you see, right, it's not just about filing your taxes. It's about showing proof if you need to show proof when you're audited. And that involves clearing up all your receipts. You need to keep a record for 7 years. All these kind of nitty-gritty things, right? Yeah. So I feel it's sometimes best to outsource when the potential saving, how much you're going to pay them? Probably 600 ringgit, 900 ringgit, or even 1,000, but it can save you like 20,000 in taxes. It's a 1 for 20 gain already,
That's very true. It's like just using the leverage there. But what if okay, so you're talking about someone on the higher end of the tax bracket, right? But what if like they're just starting out, they're on the lowest end?
Great question. I used to do all my tax filing myself. But then I realized I did not understand the tax code well enough. Yeah, and that's where I think once you've I know of some colleagues, what they did was when they got to a point where they were earning like, let's say 10K a month, okay, they hired a tax consultant once just to see how they do the filing. Then subsequent years they do it on their own. They would rather save. Yeah, because what you want is a system. I know a lot of tax consultants will hate me for saying this. Yeah, but
okay.
I think because the question you were saying is that for those starting out.
Right, correct. They might still actually have the time.
Yeah.
But I think it's true, like not everyone has those skills to understand all the tax codes or even have the patience, I think.
Correct.
I think more is the patience. And properly understand.
Yeah.
So maybe if they're doing it themselves, or if you're on any end of the tax brackets, you're doing it yourself, are you actually maximizing the savings, right?
Precisely. Yeah. And over and above the maximizing of savings, I think when you're starting out and with the government now looking at every revenue stream that they can get their hands on, be prepared for an audit. So I know a lot of people who did their own tax filing and they're very happy they got a rebate back because most of the employees their taxes are deducted every month through this thing called PCB,
Correct.
right?
Correct.
And sometimes because of all the reliefs you put in, you actually get back a rebate. Then they're so happy. Case closed. 2 weeks later, then all of a sudden 2 months later they get a letter from LHD and it says, can you please show me this.
Right. Yes.
And that's where that paying, like for me as a small business owner, I feel that whatever I pay my tax consultant is well worth the money. Because
correct.
all the filing, all the scanning, all that, right? The moment you get audited, pop, it's all there, And then if you're like, if you didn't file it properly, oh my God, you'll be scrambling like mad just to get all that lah. Yeah.
So you recommend like just getting someone's help, an expert's help, no matter which end you're on, and maybe
Correct.
if you just want someone to just help you systemize it once and then do it yourself after that, also works, right?
Precisely.
Okay, so that's for the personal side. So what about the business? Anything that's different there? You think that maybe a small business owner, someone who has just transitioned from like being an employee, going to entrepreneur, what are things that they should look out for in terms of their taxes?
Again, I guess best to get someone's help. I started with being an insurance planner first. So I thought that, insurance planner, that time not making a lot of money, and you could do it yourself. Then I realized as a business owner, there's even more relief, even more capital allocation, even more tax allowances, that you need a combination of two things. You can hire a bookkeeper to do all your receipts. That's fine. But understanding how to maximize or optimize that tax, I think that is even more pertinent for a solopreneur, because whatever savings you have is already gonna impact your bottom line. And what I really like about me outsourcing my tax planning is that all this calculation to prepare your balance sheet, to prepare your P&L, it all gets done by the tax consultant. That's expected. You may do your own business accounting, but your business accounting is not, if it's not optimized, you actually pay unnecessary taxes, I would say. I'm not saying avoid tax. Don't get me wrong. Please pay your taxes. LHDN has ways and means to find you, and please contribute to the nation by paying your taxes. But how do you know you're paying optimal taxes? That's the point I'm trying to make. Yeah.
So the idea is to make sure you get professional help, right? Whether
Correct.
you are doing personal taxes or doing taxes for a business. But here's the question: how do you find a good one? What are the characteristics someone should look for both? I'm sure there are different nuances for each segment.
Yeah. For me, I tried with recommendations, so I tried a few. Right, and so far the one that has worked for me, I've been with her for about 2016 until now. How many there? 7 years. Yeah. I think there's no harm trying one or two. I mean, filing one time. I think the rates are quite competitive because there's a lot of freelancers offering this kind of services. But word of mouth was my first go-to because I don't think this kind of thing they would advertise from my point of view.
Right. Yeah.
I mean, yeah, Louis, you run your own businesses. I'm pretty sure you also went to your tax consultant based on a word of mouth, right?
Yep. Usually, like someone recommended me and try it out, and if it works out, then yeah, I keep using them. Yeah,
I see.
But yes, I think you have to be open to trying a few.
Correct.
To see which works the best, and if that person is doing a great job, you can just keep going with them. Yeah.
Correct. Yeah, and it's not a very big chunk. I mean, it ranges anywhere between the high hundreds to a less than 3,000. Depending. Okay.
Depends,
again, I have to qualify. Depend on the scope of your company and your business. Yeah.
For personal, I don't think it should exceed 1,000.
No, I don't think so. It's a few hundred. It's a few hundred.
Yeah, a few hundred is normal.
Yeah, for them, especially if you are like, if you're not yet in the maximum tax bracket, I doubt even the relief will actually move the needle. That's the point I'm trying to say. Yeah, unless you're living large, that you are like living way beyond your means, then
Mhm.
maybe, yeah. But very unlikely it will move the needle that much.
Mm-hmm.
Yeah.
Yeah, I think yeah, so in summary, just find someone,
Find a good
a
one. Yeah.
professional, but you have to do it. So what if like there are some people, yeah, you were just saying, pay your taxes, make sure you pay your taxes. I'm on that boat as well, and I think a lot of business owners are. But what
Mm.
if like there are people who think, actually I want to avoid my taxes. Should they even do that, you think? It's a very sticky question, but I think deep down, it is a question that some people will ask and
Yeah.
try to actually, execute. And what do you have to say to that if they should try to
Put it
avoid
this
the tax?
way. I've personally seen some people try to do that.
Mm.
It did not end prettily lah. I would say this way lah.
Mm. I think especially if you are making quite a bit and you owe like a lot of tax.
yes. LHDN has a way to find things lah. And
Mm.
I do know of some of these tools, and it's a very effective tool lah. Yeah, unless you're willing to launder money lah, cash, everything.
Sorry
Then
guys, at WangHiro we don't teach you that. You gotta go to another
yeah, and
podcast.
I don't condone all those kind of practices. My God, I'm like, I mean, the only things I see people do this is in the movies You know like the mafias in the
Yeah.
you get cash you stash, and then there was
Mm.
this what's the name of that? The drug dealers in the Mexican drug cartels, they'll pay cash and then they'll stuff it into the wall. But do you think you can ever sleep nicely and peacefully without going through all that?
Yeah, I think if you're thinking about avoiding it, I think just consider that it's a lot more convenient just to pay it, and
Yes.
at the same time helps the economy, like what John said. Yeah, regardless of what your opinion of our government is, I guess.
Yes. Put it this way lah. No, there was one time I was talking about GST, and I said I was all for GST, bringing it back, whatever. And I said the government needs the money, and then please pay your taxes and all that kind of thing. And a lot of the viewers in the comment section kept harping on, I want the GST, but I don't trust the government in administering it. I said, if you expect squeaky clean implementation, whatever, the whole government will have to be staffed by robots. No emotion, no bias, no whatever.
I think we have to accept that this is human nature.
Correct.
Nobody's going to be perfect. And even if they try to be, they may not match your level or your perception of what's
correct.
Perfect. That's the problem.
Yeah.
Okay. Yeah. I think because we are not tax consultants, we can't really go into too much detail. But the idea is that get your taxes done, and make sure you get an expert who you trust to do it, and then pay an affordable fee to do it. Okay, so now, John, let's turn our attention to another unchangeable truth in life: death. Now, death isn't always a welcome thought. It's a very unpleasant thought. When we think about death, we think about, being sick, old, but in fact, it's something that if you want to have a healthy financial planning done, it's something you need to think about right now. Consider this: 80% of Malaysians don't have a valid will. So what does it mean? It means that most people haven't had any plans of what will happen to their estates when they pass away. So what's the problem with these kind of statistics you see, John?
I think it's there's a phrase. It says, when you go to heaven, don't leave hell behind. So when you don't have a valid will, you're leaving kind of like hell to the beneficiaries to try to sort out or tie up the loose ends of your estate. And it leaves a lot of ambiguity. And as we were discussing prior to the podcast, sometimes family feuds happen because of not having this proper will or whatever done. The struggle is always, what is the assumption? What is fair? Actually, we cannot solve the fair problem altogether, but having a will sets in place what I consider a framework for the family to like move on, close chapter, move on. I mean, if you look at the Lim family, Lim Gotong's family, people are actually fighting about what was in the will, what's included in the will. I don't know if you follow the news lately, Louis, about Lee Hsien Loong's brother being taken to task for lying under oath about the father's will.
Oh, didn't
Just
know
like
that.
last week, yeah. the
Wow.
family said that some members of the family said that Lee Kuan Yew wanted to destroy their ancestral home where they
Yeah,
live.
yeah. I've heard
I
of
think
that,
it's
yeah.
yeah. And then they were conflicting. They were different camps within the Lee family, and then now they found out that actually was it the elder brother or younger brother? Yeah, but Lee Hsien Loong's brother was cohort to like lying on the will.
Oh,
Yeah,
so in fact, what was the intention? Do they want to
they
destroy it?
they Lee Hsien Loong wanted to keep, Lee Hsien Yang wanted to destroy. Yeah, and the rumor or what was being said was that Lee Hsien Loong wanted it to keep a legacy so that his political career could still survive.
Correct, correct.
Yeah, that was what I mean. I'm just reading
Yeah,
verbatim
just
or what.
quoting off the news, right? That's
Yes,
what's
yes.
being said. We
Whether
don't know.
my
We don't know.
opinion, whether who is right, who is wrong, I have no
Yeah,
idea. I have no
no idea.
clue.
Yeah,
And I'm using this just as an example, is because
yeah.
if you don't like get the will done properly, this is potential repercussions of that lah. I would say that lah. Yeah,
I think when it comes to like estate planning, having a will, yeah, like what you said, from a personal perspective, it can cause a lot of squabbles
correct.
and disharmony in the family. Just thinking about, okay, what did this person actually intend, right?
Correct.
And then there's the other, the other side of things, business side. Right? If you own a business, a lot of people don't really think about it when you're running the business. You're in and out every day in that business. You don't think about, okay, what if I pass away? Then what happens to this business,
Correct.
right?
Exactly. Especially if it's family run, I think it's even worse.
That's
But if
true.
it's
You have both of the problems mixed together in one bowl.
correct. If it's like in a way institutionalized, where you have professional managers, institutional guys coming in, right? By then they would have a HR process. They would have like systems or institutions to actually systems in place to actually sort out the demise of a founding partner or whatever. But if it's family run and there's no such systems in place, that's where it gets a little bit murky. And that's where even it can bankrupt a particular company. And I've seen personally, I've even seen companies that go under. Can you imagine? Okay, let's use an example. Let's just say a brother and a sister, they went into business together. Okay, they started out small, each injected 50% capital. Let's just say they started off with 100,000 working capital for the business, so 50,000 each. 5 years later, they've grown the business to from 100,000 starting capital is now a $10 million business. Okay, $10 million business. And in the meantime, both the brother and the sister started having a family of their own, having children, and both of them are, in a way, let's just say, single breadwinners of the family lah. Okay. Here is what are the scenarios that could potentially happen. One, everything hunky dory. They both live a long life, settled, right? They sell off the company to another company, or succession. They have their children come into the business and run the business. Okay, that's utopia scenario. Okay. The second scenario could be, midway through, the brother and the sister started fighting, and both of them got into a big friction that who is the rightful owner of this. Okay, and all of a sudden, the brother passed away. Okay, now here comes the problem. The wife of the brother will say, "Hey, your brother," speaking to the sister, "your brother put in his blood, sweat, and tears, grew this business, whatever. Okay, I want a share of the business." It's not that they want a share of the business, Louis. What do they actually want?
Money.
The money, the wealth that is being generated. They don't want the business. They want the money from the business, not the business. Okay.
Right.
Now, how do you protect the business? This is where estate planning and a couple of insurance it comes into play lah, because that's where I'm going to simplify. I wouldn't go very deep here, but there are ways and means to actually buy out the portion. The company has a way and mean to buy out the portion of this the demise as brothers estate portion, and actually company can still survive that you take over. Let's use an example of, let's say, I think the brother and sister is the best example already. The moment the brother passed away, the sister has to figure out a way to buy out the portion of the brother. But he or she may not be able to draw down enough funds from the company to pay it out, because a lot of funds is stuck in working capital and all that. But by buying an insurance plan and having a share purchase agreement, the insurance plan will pay upon the demise of the brother. The money will come into the company. The company will actually use this to actually buy out the portion of the brother's equity stake from the estate. And it's already pre-signed, just waiting to be executed at the trigger point, in which is the demise. Vice versa, if the sister passed away first, the brother will have an insurance payout into the company. The company will actually buy out sister's portion. So
Exactly.
yeah,
I think it's just so useful now that you know elaborated on it, why everyone should actually think about what would happen even if it's
correct.
unpleasant in their
Correct.
death. But based on your experience, John, what have you come across people who you tried to tell them, hey, do you have a will? They don't. What's the reason for that?
Very good. I love this myth busting. First of all, the best one, I'm not rich. I don't need a will. First
That's
one,
true. That's true.
I'm not rich. I don't need a will. It's not because you're rich you have a will. You're poor, even more you need to have a will. Why? The little pittance that you're gonna leave over to your dependents, right? There's so little to fight over for, and yet it's still going to
They're still
create
fighting,
unnecessary
right?
squabble,
Oh my gosh,
right?
that's true.
Yeah. Obviously, the richer you are, the bigger the problem you need to solve, lah, right? Right. But the realization is because a lot of them, the first thing is say, I'm not rich enough. My estate is not that big. Okay, that's the first one. Second one, I'm young. I don't have dependents. Why do I need to I didn't take care? Yeah, I only have a
That's
car or
true.
whatever.
That's true.
Yes. My retort to that is this, Louis. It's not about how much you have or how young you are. It's how much hassle you want to leave for those behind you. So let's just say, yeah, go ahead.
Everyone is born with at least two parents, right?
Correct.
So, yeah.
Yeah, it's the hassle you want to leave. Okay, let's just say you just graduated, 25-year-old, 26-year-old. I don't know. Sorry, they graduate much younger these days. 22. All right.
No, I graduated at 22. I think now you can graduate like 20, 21. Yeah, young.
Wow.
Very young. Very young. Yeah.
Let's just say 21 years old, you come out. What are the likely possessions that you may have? A savings account, probably. Some maybe one or two credit cards. You probably have a car.
A car.
Okay, a car. So now at this juncture, is it really necessary to have a will? I would argue it's 50-50. I mean, it's not that difficult for your mother or your father to take possession of your estate, but it's still a hassle. So let me explain the hassle first. So little stuff, right? A savings account, probably a car. Maybe it's not even a brand new car, second-hand car. So the moment you pass on and you don't have a will, you die what we call an interstate. That means there's no estate planning or whatever is done. Your mother or your father, technically, they don't have direct claims on your possession, even though it's a savings account. They cannot. It's not automatic, Louis. It's not.
Yeah. I think a lot of people would think it's automatic, right?
Correct.
Yeah.
It's not.
That's another.
So you die in a way, your
confusion.
estate, your whatever estate you have, your savings account, even though it's $50 in there, right? $50 in there, and your car, who maybe the loan is completely paid, but under your name, it's in a limbo. It's stuck. It's stuck. So your dad or your mom, being, let's just say, they want to administer your estate, they could probably go to the court and ask for a letter of administration. Okay. So they ask for a letter of administration to say that, okay, I'm the rightful heir. The reason why they need to ask for a letter of administration is that, let's just say, somehow or rather your siblings want to fight your parents for the
Oh
car.
my God.
For example, for example.
Okay.
And then it said,
That'll be
hey,
interesting.
this person actually wrote a will. My brother actually wrote a will saying the car should be mine. They'll contest. Or maybe even the uncle said, hey, these parents never took care of this child. I took care of the child. I should have a claim of his earnings or policies or car or whatever lah. You see, we never think of that scenario.
That's true. That's true. That's true. I think it's just like when you're not rich, right? You always think, okay, I have nothing to, you know. I think when we think about wills, we think about inheritance, right?
Correct.
And that's
Correct.
quite a big thing. And we think, okay, we don't have anything to pass to anyone in a significant way, so don't have a will, you know. And then when you're young, you don't think about it because you don't think about the hassle
Correct.
that you could bring to other people.
Precisely. And I know a lot of families, like their childhood was, they were taken care by their grandparents,
Right. Yep. Correct.
taken care by a uncle, whatsoever, right? And some of these family members, they want to lay stake on a stake on your estate, ma. Okay. So obviously there are rules, right? There's the Distribution Act to actually like administer who gets what, whatsoever. But for that to happen, someone has to step up to be the executor, okay, of your estate. Now, that's the first part. They can go to the land office, apply a letter of administration to administer your estate. Okay. For you to qualify to administer your estate, you need 2 guarantors.
Oh.
You need 2 guarantors. So your parents have to start looking for guarantors. Because what you see, the moment they are given the letter of administration they are the custodian of the estate. What if they run away? Because temporarily you are the custodian, but you can run away. That means the other parties cannot come and that one, they can run away. So they say they actually need 2 guarantors. These 2 guarantors, right? If the executor or the administrator of the estate run away, the guarantors have to pay back,
Wow.
Yeah.
Serious.
So me
So it's kind
describing
of
this to you, Louis,
who
you
should-
want to do or not? You want to be guarantor or not?
No.
No way, right?
Scared
Even though
eh.
for like a 50 ringgit savings account and probably a MyV for like 40K or something, right?
Yeah, lor. So scared. So what I mean, other than these 2 reasons, are there other reasons why people are not?
Many. But I think the third one
Maybe
probably is that I don't know who to go to. The process is too complicated. I don't even know where to start. Right?
Very true. And I think because of some of these reasons, this not having a will, it is actually ballooned into $1 billion problem.
Correct.
90 billion worth of unclaimed assets in Malaysia.
Yeah.
With from just one report, there are other reports as well. 90 billion. How did that happen, Sean?
Because as I said, you see, you mentioned 80% don't have a will, right? Actually, the number I believe is actually higher.
Wow.
Okay, here's another statistics. I know most of our audience are English speaking, but the sad part about it is that the higher percentage of those who don't have a will is actually the Muslim population. And the reason why they don't have it is because whatever they will have to follow the faraid distribution. So there's all right, based on their religion, the faraid distribution, and that's why for them they thought, why bother with a will? Why bother with a wasiat? Because it still has to follow the faraid law. Now, obviously, I'm not going to go into here, but obviously there are ways to circumnavigate that and to distribute based on the proper wishes. But yeah, I think the Muslim population is even lesser in terms of wasiat writing. Chinese, I think it's because of generational learning and wisdom, then they have wisened up. But even then, it's not up to the mark of a very developed country. And that's why it has ballooned to 90 billion. Because a lot of it is the moment there's someone dies interstate, the dispute happens, Nobody wants to fork out the legal fees. Nobody wants to be guarantor. Ding dong, ding dong, ding dong. Then pop. That's why you see a lot of
Unclaimed.
unclaimed estates, assets. You go to like
Mm.
certain taman, right? The house, right, is so dilapidated, but
Yeah.
then no one is buying, no one is selling. There's no even
Mhm.
like, because it's stuck.
Oh my. I
Yeah,
think just thinking about that really is scary. Thinking like, okay, we think about that from like, okay, maybe a previous generation, but what if it's yours, it's your house,
correct,
right? It's your
correct,
property that goes into limbo instead of like, being used by someone, at least, having some utility, right, during its
correct,
lifetime.
correct.
Yeah, so now maybe we can, go into how to do it. I think a lot of people don't know how to get started.
Yes,
Many people, think, okay, maybe this is for old people. I'll think about it later. But I think it's useful for people to just, even if you don't intend to do it right now, right away, just to get an idea about what's estate planning, how is it useful. If you really want to get it done, how to do it the right way. So
Mm,
John, maybe we talk about why they need estate planning, like in
yeah,
more details. What are
yeah.
the technical reasons why someone may need to do estate planning in general?
Very simple. You don't want to leave unless you feel that your parents could take all the hassle. Then by all means, or your brothers and sisters. I can tell you, everyone. I've not seen one that has been an executor of an estate say they enjoyed the job. One.
Right. So
Eh,
a will would help the executor a lot, and then have everything distributed the way you want.
Correct. Distributed the way
Mm.
they want. And even then, the person executing the will, they would tell you it's a tiring job, even with a will. So
Mm.
just imagine
Oh,
without a
even with the
will.
will. Wow.
Yeah.
Okay.
Even with a will is already very tiring.
Mhm.
Can you imagine without a
Mhm.
will? I'll just give you an indication. My
Mm.
father had no, my grandfather left the family with a piece of agriculture land. Okay.
Mm.
And it long to short, it took my dad 7 years to have it converted, distributed equally among the brothers and sisters.
Wow, 7 years.
Yeah, yeah.
I mean, what was taking so long?
Many things. First of
Oh,
all, he had to
mm,
like what I explained earlier, he has to get the grant of probate or letter administration because my grandfather didn't have a
um,
will. Okay.
mm,
Then secondly, because there's no will, then how do you divide among the siblings? Right? And how do you apportion and how do you get all the land titles? You have to change the land titles again because you have to like
mm,
now it's one land title and then usually it's just one-to-one transfer. But now you have to break up the parcels of land into like different segments again. So
mhm.
again, you see a lot of administration
And
back and forth lah.
there's just
Yeah.
one piece of land, right? So imagine
Yes,
if you
and
had
it's like
more than that.
in the middle of nowhere kind of piece of land. That
Yeah,
like
so
my
imagine if you had like a prime property, a few of them, so
That's it,
everyone's gonna fight
man. That's
over
it.
it.
All your siblings come. Suddenly, your long lost uncles or relatives will
True,
appear at
true.
your
Yes,
doorstep.
yes. So we talked about like, okay, it's not necessarily true that if you're young, you don't need one. But
Mm.
is there like an ideal age to actually create one?
I think rather than an ideal age, I think an ideal
Mhm.
milestone rather than
Milestone,
age.
okay.
Yeah.
Mm,
When I say milestone, meaning when you start having assets, as you start accumulating assets, that's the first milestone. So when you start having a car, you start buying property. Okay, that's the first milestone. The second milestone is actually when you have dependents. So right
mm,
now, your let's just say when you started working, your parents were still healthy.
yeah.
They could still fend for themselves. They have certain income, whatever. But all of a sudden, one of your parents fell sick. He he or she needs like aged care home or medical care, whatever. Then you may not have a lot, but now your dependents are your parents. Your parents are actually depending on you. Not maybe they have an estate that can pay them some passive income or whatever.
Mm,
But if they don't, then the burden falls somehow on you, unless you can choose like to
that's
ignore
true.
lah. But so again, here again is rather than an age, it's a milestone. So
Mm,
asset, when you start gathering assets and when you start having more and more dependents. Okay, you
mm,
may not get married, but then your parents have that one. So when you're accumulating your asset, you may want to leave some for the dependents, as per
mm,
your wish. You see, yeah.
mm. So like if someone were to, just want to go about starting with that, what's the starting point for them? Should they just, go to a professional directly, or are there things that they should prepare first?
I think in estate and trust planning, you can't go too wrong with the big boys. So there's only a few what we call trustee companies or specialized estate planning companies in Malaysia. Obviously, they're not paying me branding or anything for them. I'm just naming the obvious. People like Rockville, people like public trustees, people like RHB trustees. These are the big ones. Okay. The biggest one, Amanah Raya. A lot of people very seldom hear of this company, but
Correct.
if you've bought unit trusts, they are actually one of the largest trustees for unit trusts.
Oh.
So when you buy a unit trust, let's just say from Public Mutual, the trustee is actually Amanah Raya. Most of the funds.
Interesting.
Yeah. So they are like the custodian. They're like the custodian. Okay. So there are many
So you
ways.
say like they should just directly like go to a professional? Is there
Correct.
anything they should
Okay.
prepare?
So very good
guide
question.
them?
Go and shop around because the most standard will, actually you can even do your will online on CIMB right now or Maybank.
Oh, okay.
If your estate is very simple, and it's not too complicated, I think let's say in a value of around 300,000, right? A simple will do. Go to a Maybank or CIMB, and most likely, if I'm not mistaken, the CIMB one was paired up with Amanah Raya also. So it's only 450 ringgit. Okay. You can also go to a lawyer. But here's my argument. The problem about going to a lawyer is that unless they are specialized in estate planning, they would understand the estate planning code better. But if you go to any conveyancing lawyer, they may not capture the right essence of the estate and may even make the will invalid.
Oh wow.
Yeah.
So very good point on that. So what actually makes a will valid?
Okay. It is executable. I think it's as simple as that. There are definitely other criteria that it has
But like what if I'm saying like, okay, some people think maybe I just write myself.
Yeah, you can. You will, right? You can actually write yourself.
Write myself.
Yeah.
Is that still executable?
It depends. It's very hard to say until you see what the statement. But you see, right? First of all, you need two witnesses. And the witness must witness you signing the will. So if you're doing it yourself, how do you prove that the two witnesses actually signed together with you? What if one of them pass away, whatever?
Yeah, lor.
First.
If someone passes away, then you find another witness, or you pass away together.
Yeah. Actually, like for me, when I did my will with institution, I did it with public trustees. I did it with public trustees because I got a free will because I was a Public Mutual Gold client, unit trust. Okay, so I got a free will. Okay, 450 ringgit. It's a marketing thing that they give. So when they signed the two witness, it was under CCTV, so it's recorded. Again, you see, so little things like this. Second thing is it must be legible. There's a whole host of things, right? But the main thing, the main crux of it must be executable. Yeah. Because
okay, so that's about the personal side. So maybe we talk about business. So let's say someone is a business owner. All right. So for the personal, we know it's milestone. Right. You have assets, you get married, or like you have some dependent, your parents are aging. Well, business, like okay. So if let's say I'm 1 year into my business, should I still think of a will? Is that too early?
Very even more pertinent for business. I would say that the moment you start, you should already start thinking. One, if you are in a partnership, even more pertinent. Okay. If you are a solopreneur, and you are the main breadwinner of the family or the dependents that you rely on your business, I think that's even more important because it should include even instructions of how to shutter the business or how to close the chapter in the business. Because you see, right, as an employee, that's it lah. You pass away, Company pays you a last salary and that's it, you know. But for a business, it's ongoing, ma. You have creditors to pay, right? You have creditors to pay. You also have client relationships. You have certain things that you have in place in your business. Now, who are you going to leave the business to? Someone needs to wind down the business, close all this, right? So for me, that's even more even more important that you have a will to like.
Makes sense.
Yeah.
Is it then still the same like people to do it? Is it still Rockwell?
Yeah.
Or have different people to handle
The
business?
best again, because the estate, the trustee companies, right? They've like, this is their bread and butter. They've done this day in, day out, whatever. They may even have templates for you to follow. And that's where you're paying. Yeah, you're paying for this. And obviously, we're not going to go into the more complicated stuff. Like, you can even set up a living trust, meaning you don't want your company to wind down. You actually set in place professional managers to come in and they start institutionalizing your business and start paying, gathering profits and then paying off dividends to your dependents. So obviously that gets more complicated lah. Because you want a sustainability to happen for your business. But usually for a simple solopreneur, the moment you finish, the moment you pass away, you may want to wind down the business and you just want to distribute the proceeds. All that, right? If you don't state it out very clearly, like your mom's gonna, let's say your mom or your sister is like, Louis, what are we gonna do with this business? I don't know how to run it. I don't know operations. I don't know your supplier. Who do you owe? Who do you not owe?
True.
Right?
So in terms of business, it's never too early to start thinking about estate planning.
Correct. Yeah.
So does it like, okay, so when it comes to wills, I think other than how to do it, how to go about it, I think a lot of people have some confusion around some beliefs around setting up wills. So the first one of it is the one you talked about, like, okay, do I actually need to go to a lawyer to do it? A lot of people think this, and I always used to think that as well. You know, everything legal, it seems to be legal. Okay, I should always go to a lawyer, but it seems like it's not always the best choice, right?
It's not always the best choice. One is lawyers, they have a lot of niches or specializations. So unless and until that lawyer is specialized in estate planning, then I think that, and even then, right? Even then, so let's just say checklist number 1, lawyer is in estate planning. 2, can the lawyer, if you're going to execute the will, and will this firm be around 50 years from now? You may outlive the lawyer, you know.
Wow, something. Okay. So as long as the lawyer is not around, then the will becomes invalid. Is that what?
You have someone else is keeping custodian of the will, and someone has to be the executor, ma. So
that's scary.
how do you transfer that over to another lawyer? The lawyer said, "Hey, I didn't earn the fees. Why would he care?" The new lawyer, let's say you transfer over to why would I care? Right? Yeah. Yes, you have an executable will because it's drafted by a lawyer. But there are other things to think about lah. Like,
so the better choice would be, you know, going to an estate planning company themselves, like businesses.
Correct.
Right? Yeah.
Correct. An
Very
institution lah. Put it this way, institution lah. Yeah. Because these institutions are more likely to outlast the person versus that of a lawyer. Unless the lawyer, how will you guarantee the law firm is going to be around 10 years from now? Don't say 50, 10 years from now. He may chap lap, the founder may pass away, that's it, you know. Then you have to go and did the lawyer even do like a handover? So let's just say the law firm, the guy passed away, heart attack, right? Wheels all stuck there, right? How would the legal secretary know? You think about it?
Right, that's true. I think they then would need their own succession planning and all that.
Correct.
My gosh, yeah. So all of these will already be handled when that company is already doing it professionally, and that's the only thing, you know, that they're doing.
Correct.
Okay.
I'm not saying that you should. I mean, I know some of them, they have a good relationship with the lawyers and they want to, but these are the tiny things that you may want to.
They just complicate things. Makes things complicated.
Correct.
So the second myth we want to like talk about is the people think that when you pass away, all your dependents will immediately be able to access whatever you've left behind. But
Correct.
it seems to be it's not even true, like what you said before we started the show. Even like some money left in a joint bank account, you can't actually legally touch that money before it's executed.
Yeah.
What's the reason for that, John?
Because the moment the person pass away, you think of it is the estate is frozen in time, and it wants to give fair rights to everyone who lay claim on the estate first before the beneficiaries get it. So I give you an example. Okay, let's start with the first question. The moment a person dies, who has first dips into the estate? Who do you think has the first rights to put their hand in the estate? Anyone?
Spouse,
Again? Try.
government,
Tax.
tax. Oh, okay, I didn't know that.
Did he or she in his whatever lifetime owe any taxes or not? Like what
Oh
you
my
say,
God.
theft, only certain is death and taxes on you.
Oh my God, even in death, the
Yes.
taxes haunt you.
It's not the family. I'm sorry.
Oh my
It's
God, so it's the taxes.
first dips is tax. Zip. Anyone you owe SDN anything or not? Zip. Okay. Second,
We check
who
first.
do you think has second dips?
Okay, bank.
Creditors. Correct. Bank.
Mm.
Do you owe loan? Do you owe anything? So just imagine,
Oh my gosh.
when you're young, you say, "Oh, I don't have any." Yeah, but let's say you got a car loan, right? You got a car loan. The moment you pass away, the estate technically has a car, but it still owes. It's actually higher purchase to the bank, ma. The bank still owns it, right?
That's true. That's
Yeah, right. So then the bank can claw back. Then your parents was left with the hassle of administrating all this.
true. Wow.
Yeah.
Okay, so I think this boils down to something called like a probate and non-probate assets, right?
Correct. So most of those in the will is actually a probate asset. So examples of probate asset, I know it sounds like a very technical term, lah. Okay. Yeah. So anything that is administered through a grant of probate, which is given to the executor of the estate, are things like your personal bank account, business bank accounts, stocks and bonds, your vehicles, your businesses, any real estate, any houses or whatever, and then any personal, even your car, your dog goes under probate.
Dog?
Yeah, let's just say you own your dog, right?
Wow. Okay.
Okay. They
So the
usually
dog
give
is an asset.
yeah. Hey, who knows your dog is like a Dalmatian and you can sell for like
right. True.
yeah, right. Okay. Because you use the example of personal items or personal properties, right? So I'm just giving extreme end dog. Okay. Right.
Okay.
Dog. Okay. Now, even under probate, there's actually two different categories also. It's movable and immovable. So like real estate are all the immovables, because you can't move the house, right?
Right.
And then the cars you can move because sometimes people say, "Oh, I just drive away the car lah." Then people who don't know the estate, don't know there's a car, you can move it away. Okay, and all this is executed based on a probate lah, a grant of probate or a letter of administration. Now, the other assets are actually what we call non-probate. Now, here's the difference. In non-probate, the beneficiary is more important than what is listed in the will. Okay, I give you an example. Let's just say in the will, you written like 50% of your money goes to 50% of your EPF money goes to person A, your mother, your father, whoever lah. But in your beneficiary list in your EPF, you say 100% goes to your spouse. For example, you're married.
Okay.
Which one should you follow? The EPF nominee list or your will?
EPF nominee list.
Correct. So this is a clear example what a non-probate can do. The beneficiary list is actually more important and it's immediate. It does not need to go through the entire probate process. or the estate distribution process. That's why it's called
Mhm.
non-probate. It's
Mhm.
distributed immediately to the beneficiary.
Mhm.
And that is why insurance is very important, because it gives you 40 days, after 21 days, access immediately to the money upon demise. Whereas if you think about it, all your personal bank account, your stock, your vehicle, whatever business company, long to short, even with a will, the whole thing takes 2 years, Louis.
Wow. So consider, like, if we consider that, okay, we have dependents who need the money right away, right? Can't
Correct.
really actually depend on the inheritance or whatever is left behind.
Correct. That is precisely why I wanted to bring out this
Mhm.
probate and non-probate assets. You need to have a combination of both,
Right.
because let's just say, touch wood, okay, let's just say your mom has 20 million worth of property, 20 million bucks, okay? But it's everything, she has no EPF, I'm just giving a hypothetical example, right? Everything is stuck in the property. The moment she passes on, where you gonna get money for funeral money? You can't touch the bank, remember? You can't
Oh,
touch the
man.
bank.
Okay.
You can't touch all her liquid assets, because it's all under probate,
Mm.
So that's why that
Wow.
insurance is damn important, because that's where 14 days or 21 days, depending on the company. Usually it's within 2 weeks to 3 weeks. Straight away, your beneficiary is, let's say, Louis. She's
Mhm.
given, let's say, 500,000 or 200,000. Then she gets to pay the bereavement costs, whatever, settle small stuff, pay off certain debtors or whatever. And that's why that non-probate is so important. So the two biggest non-probate in Malaysia is actually EPF, your EPF, and actually insurance. The two classic examples. Obviously, there's more things like your living trust, whatever, transfer on death, payment asset. But these are all more, how I say, more nuanced, more specialized assets. But the two simplest for most people for non-probate is actually your EPF and your insurance. So a lot
what
of people
about, like,
say, go ahead. Sorry.
okay. So what about, like, the gift of love and affection? How does that apply in terms of, like,
Okay.
inheritance?
Now, this one is more of for the okay, when you transfer an asset, let's just say your mom inherited 20 million to you, properties, okay? When you transfer property, there's this thing called memorandum of transfer of the asset, and you actually have to pay taxes on them. And the taxes is determined based on the value of the property. So there's a tier. First 400,000, how many percent? Anything above 400,000, how many percent? So if your mom were to transfer that 20 million asset over to you, you have to pay taxes on the value of the asset being transferred to you. Now
before
this
I
is
can get the money, or I mean the
before
asset.
you take possession of the asset.
Wow.
So when you buy a house, okay, I give you an example. When you buy a house, you do this thing called an MOT, memorandum of transfer, which is transferring the title of the house over from the developer over to you. Because when the developer was owning it, they own the land, and the land title belongs to them. Okay. So when they transfer that over to you, you have to pay the MOT. So I give you an example. A property about 500,000 in value, your MOT anywhere between 20 to 25,000 ringgit. Okay. Now it's 20 million, you multiply and a different tier. So now this is where the gift of love and affection is, that I'm giving you, but I'm valuing this property as $1 nominal value. So you don't need to pay the taxes on this asset. Now in 2017 they changed the rule. They actually say that you cannot blatantly apply this, because a lot of rich people, what they're doing was a lot of this, the
loophole.
bundle all together, 100 million, 200 million gift of love and affection.
Wow. Gosh. So it's someone who is out there to exploit this.
Correct. But the concept is this: instead of paying the full asset value tax, the gift of love and affection gives it at a nominal value. Then the beneficiaries don't need to pay the full brunt of the taxes. That is the reason why this
So it's
term.
something that needs to be written into the will, is it?
Yeah. One is the will. The other one is you can get your executor to execute it in that way.
That's very
Yeah.
interesting. Okay,
Yes.
so I think we learned quite a lot about taxes and estate planning in this episode. So regardless of whether you're an employee or an entrepreneur, I think you have to really think about your taxes and death, right? These are two unchangeable truths that will probably persist until we find the elixir for use.
Correct. Correct.
And maybe like first escape death and then develop a whole different way of managing money. But before that, tax and death will always be around. So in terms of estate planning, it can be intimidating at first, but if you work with a professional, they can help you to manage it. And there's not really like too early to do it. You can do it
Correct.
when you're very young and healthy, and in fact you should start it as young as possible, so at least you know what you're doing, right, John?
Yes, that's right. I think you sum it up very nicely in the sense that get guided help. I think even for me, I'm not an estate planning specialist, but because I was trained during my RFP qualification exams and all that kind of thing, I realized that, wow, it's actually very, very nuanced that a lot of people won't realize until you go through the process. All these factors are this thing, that thing, this thing, that thing. Then you're like, oh my God, I'm like so many factors that you didn't even consider, right?
Yeah, I think most of the time we only consider what we can see right now, and we
Correct.
can't really see what happens after we die.
Correct. That's right. That's right. As I said earlier, when you go to heaven, don't leave hell behind.
That's right.
Yeah. I think one last thing I do want to touch on is probably cost. Now, a lot of people think it's very prohibitive. And I'll just give a ballpark. Obviously, the best sources are still the trustee companies. Get the official quote from them. But for a simple will, it ranges anywhere between 400 ringgit to about 1,000 plus. Even 1,000 plus, it's also I think it's a price that is very fair to pay for the reduction of hassle that you want to leave your beneficiaries with.
That's true. I mean, in the long term, it's probably not much money.
Correct.
Yeah,
correct.
over the years.
Yeah. So get professional help. Louis, do you have any final words actually?
No.
Yeah. If you love content like this, do subscribe, share it with your friends and family, or those who you think will definitely benefit from this kind of content. We look forward to more questions in the comment section below. I mean, we've posted up 3 episodes. I think most of you would rather do it on Reddit because it's more anonymous. You can also do it on YouTube, and there are a lot of burning questions that Malaysians don't dare to ask. We understand you're shy, and that's why Louis set up this fantastic website where you can ask anonymously. We look forward to seeing those questions from you, and we'll see you guys in the next episode.
Thanks so much for tuning in. Bye-bye.